Well, we had tremendously positive sentiment globally for IPOs earlier in the year, and in March it flipped. We had the huge correction in social media stocks in the United States. We had internet sell-off and everything, and the shift towards value, in other words, defensive industries like utilities and so on. And this, the pulling of this IPO probably wouldn't have happened 6 months ago, but it is a reflection of deteriorated sentiment globally for IPOs. Well, not anytime soon. I think in the US the tapering continues, so you know that it will. The central banks will scale back on that QE, or at least that's the perception. And unless you have another push in QE by central banks, which pushes more people into riskier assets, we're afraid not much will change. Well, I agree with you that the correlation between the size of the Fed's balance sheet and the equity prices has been very high. In fact, it has been about 90% for the last 5 years. The tapering is on course. It will be 10 billion after every meeting, and that will not change unless you have some real drastic deterioration in the economy. But I think investors have come to grips with that. That is pretty much expected. I think what we're focusing on now is when the Fed will actually start to tighten policy. Remember, I mean, even if you have taper, you're still expanding your balance sheet, and tightening will only happen once interest rates go up, and I would say that point is still probably more than a year away. Well, Ukraine is a wild card, obviously, because it's political. That creates a lot of uncertainty, and you know that Putin is not going to back down on the Ukraine. I mean, let's absolutely be real about this. The Ukraine is of vital interest to Russia, so he will not let up on the pressure. It's to be noted, for instance, that some part of Russian weapons actually come from arms factories in the Ukraine, eastern Ukraine, so that alone would be a reason for Putin to put on the pressure. Then you have sanctions from the West, which could have negative implications. You always have unintended consequences when you come up with sanctions, whether they're working or not. Usually they don't, but it's usually symbolism over substance in that sense. But the situation is, I would say, it's explosive enough. One bad move from either side could really trigger something more serious. And I think first and foremost, it's energy security for Western Europe that is at stake here. And that's what spooks financial markets at this point.